Hey YouTube, this is Coldwater from Phantom Trading, and welcome to today's video on how to trade the 15-minute time frame. Now, the reason we're making this video is because I've actually started taking more 15-minute trades. It's not that I've stopped trading the 1 minute, but the honest truth is that the 15-minute is just easier to trade overall. I mean, there's one less time frame to worry about. The 1 minute is obviously a huge information overload if you're new to trading the way that we trade supply and demand. And I know a lot of you also work 9 to 5 jobs, or you even work longer hours than that. So I mean, it's for some of you, it's tough to actually enter on the 1 minute while you're working, right? If your trading session is the same time that you're actually working. So that's the reason I wanted to make this video. I'm going to show you guys a few trades that I've taken recently just on the 15 minute. It was actually just from yesterday. I'll also include a loss that I took on the NASDAQ, which I thought was a valid trade. I think Dan also tried to take this trade as well. So I mean, just to give you guys some transparency, I'll show you guys the MT4 screenshots as well as we go through them. But yeah, the other thing I want to mention is, if you're inconsistent on the 15 minute, I would highly recommend sticking to the 15 minute until you find consistency in it. I see a lot of people jump straight to the 1 minute, and it's kind of to be expected. I mean, we teach you guys how to trade the 1 minute time frame, of course, by doing multi-time frame analysis. But the problem is, if you can't pick a good POI, how can you expect to also be able to catch a 1 minute confirmation entry? Right? You're going to get taken out of your orders and stuff, right? The other thing that I really like about the 15 minute is there are certain situations, I think even with the trade that I took on GU yesterday, which I'm going to show you guys in a second, where I would have never caught it on the 1 minute, even though it's a POI that's totally valid. And the only way that you really could have caught it was taking it off of the 15 minute. So there's going to be some instances where they're actually going to catch trades that you otherwise wouldn't catch on the 1 minute. And yeah, I think overall, maybe you're not going to capitalize on the move as much as you can with the 1 minute. Obviously, with the 1 minute, you can have smaller stop losses. You're taking confirmation entries and stuff, but you have to kind of ask yourself, if your strike rate is really low on the 1 minute, and sure, maybe you pull a 7 to 10 R trade once in a while, versus being on the 15 minute and being able to catch more trades with less R, you have to ask yourself, if it's worth the extra headache of just being on the 1 minute and potentially missing a lot of trades that you otherwise would have taken on the 15 minute, right? Hey guys, before we move on to looking at some charts, I wanted to show you a quick comparison between the 15 minute and the 1 minute, just using a couple of simulated equity curves that I've put together. So I want you to imagine, you're trading the 15 minute, and on average, you're making 5R per trade. Your strike rate is pretty healthy at 40%. So you're basically winning almost every other trade. Sometimes, maybe you're losing a few, but on average, you're winning about just under half. Your risk per trade is 1% of your total account size. Pretend it's 100K prop firm account, and our risk of ruin, which is a 10% drawdown on that account, on the prop firm account, is 1%. That's pretty good. I mean, a 1% risk of ruin on a prop firm account, I think that's totally reasonable. Now let's compare it to maybe your performance on the 1 minute. Let's say you're profitable overall, but you're still kind of struggling to catch a healthy amount of trades compared to the amount of losses that you're taking. Maybe you're getting swept out of positions that end up running in the direction that you intended them to go. Say your average R is 8R, which is pretty good. Your strike rate though is only 25%, and say that you're risking 1% per trade. Well, we can see that our total drawdown, or 10% drawdown risk of ruin, would be 11%. So you're literally 11 times more likely to lose your funded prop firm account trading the 1 minute. And this is based on 100 simulated trades, by the way. So we can see here on both of them, if we look at the average performance, you actually see that the 15-minute simulation here, on average, produced a higher return over those 100 trades, with about the same maximal performance, right? That's assuming that you win, a ton of times, right? Now, obviously, this simulates, I think it simulates something like 20 to 100 different equity curves, and then just sort of averages it out. But you can see here that you're actually outperforming your 1 minute performance. And the reason for that is because your strike rate's higher. And even though you're making less R, right, you're actually producing a better return overall. And of course, your total loss risk, right, of hitting that 10% drawdown is, way better. Even if we look at like the minimal and average drawdowns here, you can see, right, the most drawdown that you're going to get with this particular, risk system is, well, on average, it's going to be 7.5%, whereas on average, it's going to be 12.2% with your 1 minute system, right? So kind of have to weigh it out. Obviously, in order to compare this and actually assess, whether you should be trading, one system or the other, is to collect the data, right? So until you collect the data, it might be a sample size of 20 to 30 trades. Until you do that, you don't really know what your performance is going to be like. And of course, we have to account for different things like market conditions, right? So it's a good idea to collect data in, I would say, sets of like 20 to 30 trades, and just try to assess, what your average R is, what your strike rate is, and you can enter it into this this equity curve simulator. I'll leave a link in the description so you guys can play around with it. But it'll give you an idea of what your total loss risk is, right? Anyways, the point that I'm trying to make with this at the end of the day is, again, if you're inconsistent with the 1 minute, or you have a really poor strike rate, or you're inconsistent on the 50 minute, don't bother going to the 1 minute yet, because you're only going to make it literally 10 times harder for yourself by going on the 1 minute when you don't have consistency, in being able to pick 15-minute POIs that actually, move in the direction that you're predicting. All right, guys, so let's start with the pound dollar short that I took on the 15-minute here. We're going to start with the weekly time frame here really quickly. As you can see, because I'm not on FXCM, we can't see the left, but we are making some new lows here, right? So we basically broke this previous low here on the weekly. I'm not going to mark it out because it's just, we're on the weekly, but I am going to go on the daily. And the one thing we can mark out on the weekly is that we're kind of tapping off of this. And this is from quite some time ago. It's from like May 2021. But okay, we can see that price tapped into the weekly and we're starting to push down, right? Okay, great. Moving on, we can see that on the daily chart, right, we effectively have started to take this low out, and that's good for us because now we can anticipate that price is probably going to pull back a bit, but overall we're still expecting that price is extremely bearish. So I'm just going to mark this as a liquidity sweep for now, right? It's good to be aware that we're kind of taking this out. It looks like we actually did kind of sweep it previously, and then it hasn't really held, right? I don't think we really expected this to hold anyways. What with the US dollar being as strong as it is, and with the pound actually weakening, same with the euro, same thing's kind of happening. But in terms of supply and demand zones, what I will mark out here is this one sort of daily range that we have that we tapped into, and you'll see that we can start to refine this a bit more as we drop down to the 4 hour. So moving on to the 4 hour, we'll just mark out this zone here, right? So we can see we kind of respected this. So mark that as the 4 hour. The one thing I forgot to actually mark on the daily, which is kind of relevant, are these daily structure breaks, right? So we obviously broke daily structure there. If we mark out our daily swing structure, it would look a little something like this, right? So we have our high, low, lower high, confirmed by our break, then another lower low, lower high, lower low, right? And I would really just say that this is floating because this is not a significant enough pullback for me to count it as daily swing structure. Moving on to the 4 hour, right? Something similar is kind of happening. We are overall in this really bearish market. Kind of had a pullback there, but what I'm going to do, the same thing, I'm just going to mark it out like so, right? We have essentially price making lower highs, lower lows. I'll just quickly mark it out using the pen tool here. So look a little something like this probably. We'll use our gray marker, right? And we can see that we have this high, this low, we pull back, we sweep liquidity, we continue to break lower, we pull back again. That's a significant pullback to me, right? We continue to push down, and then this I would say closed just well enough below this to count it as a structure break to the downside, and then eventually we break up, right? Which we can kind of view this all as one leg. Again, I wouldn't count this as a pullback, but rather this consolidated all as one bullish leg. Then what happens, price then shifts back to bearish order flow, or sorry, bearish structure as we break this low again. Right, so I'll just quickly mark out all of the breaks here so it is easy for you guys to understand. But we are in bearish swing structure for the 4 hour. And we can see that price is continuing to push down. Now, obviously, we started to consolidate here now in mid-September, even as early as like, the 13th. Price has just been kind of, consolidating, I would say. It's ranging around, right? It's not a lot of volatility around it. This was caused by, I believe it was CPI or NFP on the 13th. So there was obviously news that caused huge volatility in the market. But point is, price had tapped into a 4 hour zone and it's continuing to push down now. So now let's go onto our entry time frame. Now we're on the 15 minute, and what we can do is the same thing. We'll just mark out our 15 minute structure, our swing structure here, which looks a little something like this, right? We have a high, we have essentially this low. I wouldn't count this as a break, so I'm just gonna float it and move it down here. Price then retraces back up, and we then break this low, and eventually, let's see here, eventually we break here, we get another significant pullback, right? And we continue to break, right? So we're breaking here, and then again we get another significant pullback and then push down to this level here. So essentially we have 15 minute bearish structure, as you guys can see pretty clearly here. Now in terms of marking out zones, let's just quickly mark out kind of this range here. We can see that price essentially tapped into this 15 minute range, right? So I'll just mark it like that, and then we can see that basically we had bullish order flow or internal structure within our bearish leg as price started to pull back to mitigate that level, and then price reacted to it, pushed down, and now we just sort of started to consolidate or range here, right? We have relative equal highs here, and then we can kind of see that actually, yeah, we have equal highs here essentially. Price then started to push down, and again we're just essentially like respecting these highs and lows until it starts to break in one direction. So we can kind of see that, and what we can also see here is that we have a supply chain that's essentially formed on the 15 minute. That's looking pretty good, right? So what I'll do is I'll just drag this over, kind of define this supply chain that we've developed, and then we can kind of see that price started to violate this a bit, right? And essentially started to react off of this 15 minute level of demand that's kind of sitting below here. So it's a little hard to mark out. I'm just going to mark it out as this candle here. You can see that, of course, there's liquidity sitting underneath all of these lows, which would be from people who are trying to long it and have their stop losses kind of sitting below it. So we're essentially reacting off of this. Price then starts to shoot down, right, in New York session, right? So there was actually a short here in London that you could have taken on the 15 minute as well. I don't trade London, nor was I up at 7:30 because I think this was this Tuesday. I slept in a little bit, so I wasn't here for this trade, though I would have, happily taken this as well. But essentially, I saw that price had tapped into this, mitigated it, and then we started to shift our internal structure or order flow down bearish now. So knowing that, you can kind of see that we've actually developed this flip zone over here, right? This 15 minute flip zone. So I'm thinking, okay, if price is going to take out this presumably weak low based on our 50-minute swing structure, and we've shifted now after tapping into basically, I would say, a larger overall 50-minute chain here based on the extreme, right? Kind of mitigated like a decisional level, but it's part of this chain in a way too, right? I'm thinking, okay, these lows are weak. We have liquidity to target below it. Why not short off of here or the level above it? I would say they're both like valid levels to look for shorts off of, right? Either price is going to come and tap into this, or we're going to use this as liquidity, right, for this zone above. So what I did was I sort of waited, saw that price started to retrace back up around 10 a.m. my time. Eventually it popped up at around 10:45, and I'm actually still in this trade right now. I'll show you guys the MT4 screenshot, but actually here, I'll just drag it onto the screen right now. I can do that. So you guys can see that I'm in this. There's my MT4 screenshot, and you can see where I got filled. It's right around the midway point of this candle. So I entered market somewhere around here, and my stop loss, I believe, was something like this. I was just barely covering the high. It was about 11 pips or so. So I got filled there, and then from there you can see that price just started to shoot down. Right now my break-even point was down here, so we'll mark this as that, and we can see that would have been around 3R. Price goes through it, I'm break even, great. And then I started looking to take partials at these levels for 25% each. So what I'm gonna do is I'll put partial TP at these lows. So I believe I did it actually at this low and this low here, and then kind of see how price plays out. You can see that it hovers around for a bit. It retraced quite a bit late New York and into Asia, and then I was kind of watching it last night, and it's just, you know, ranging through Asia. And I'm still thinking, okay, there's a lot of liquidity to target under here. I can expect that it's going to continue to push, right? We're just building liquidity, and there you go. Look, we swept it and we pushed down quite heavily. Now you can also see that London had a lot of volatility as we pushed lower, and you know, by the time that, you know, I woke up this morning, I kind of saw that price continued to fade and push down, and I just continued to take partials. So I'm actually out of most of the position. I think I have like 10% of volume left on this. Even though we're pro trend and stuff, I figured, okay, let's just take, you know, profits on it. So I think overall I've probably netted something like, I don't know, 7R on this, or maybe less, maybe 6R. I would have to go look at my MT4 to get an idea, but you guys kind of get the idea. Alright guys, so moving on, I want to quickly show you an L that I took on NAS 100, as well as I think I took like a 6R, 6.5R trade on EU that I took over Asia. I didn't extract that much out of it because I was expecting some sort of pullback, and I also took it right before I went to bed, but I wanted to show you guys anyways. So let's look at the NAS 100 trade that I took, and again, it's just to show you guys you don't need to sit on the 1 minute in order to capitalize on moves in the market. So starting with the daily here, we can see that overall we're bullish, I'd say, based on the fact that, well, I'll mark it out so you guys can see it a little more clearly, but essentially we have this daily range here, right, of bearish price action. We then break up, right? We don't really get any pullbacks, so I would consider this bullish overall. But then obviously our internal structure, our 4-hour swing structure, is bearish, so I'll hop onto the 4-hour, quickly show you guys that, and then we can dive onto the 15-minute, and I'll show you guys where I threw a limit order, and kind of the reason why I think it didn't work, though I still think it was valid enough as a POI. Like I mean, I think Dan also took this trade too, so, you know, not that big of a deal. Just pull it back here to, let's see, the 20th at 6 a.m. and I'll show you guys kind of my thought process behind it. So the 4-hour kind of looks something like this, where we're bearish, like so, right? Making lower highs, lower lows. Let's see, I'm gonna consolidate this all into one leg just for the sake of it, but essentially, I mean, you could count this as swing structure. It's pretty small, right? Overall, this is like the larger overall picture that we want to have a sense of. We can see that it continues to be bearish, right? So whether you'd mark this up and then, you know, this had broken bullish and then broke back bearish, it doesn't really matter, right? So I'm just going to kind of view it as this, right? Making higher lows, lower lows and lower highs, and we can see that we just barely kind of tapped into this 4-hour range here. So I'll mark that out too, because that's pretty relevant that we tapped into that. And then now if we go to the 15-minute, we can start to break down what's happened here by looking at kind of this larger overall 15-minute range that we had tapped into. So it's weird, it doesn't really tap into the POI above it, but looks like we tap into this larger like range. So if I pick this large bullish candle here, these two bullish candles, and just kind of cover it up until like this imbalance here, you can see that price comes and taps into that. And then within Asia, from Monday night, right, this would have been Monday night, you can see that we kind of tap into that. Price starts pushing lower, and my logic was, okay, we swept liquidity here, we continued to push lower, we broke these lows, and essentially I was looking kind of at this range here. So price had shot down. I'm thinking, okay, if we're going to take out these lows and this low, and we're tapping into this 15-minute level, I'm thinking, okay, there's a good chance that price will continue off of this level, or it'll sweep it as liquidity. So I'll just quickly show you guys. I believe, well, let me look at MT4 really quick. I'll pull up the account history and my trade on this, and let's see. I'll just show you guys right here. I'll take a screenshot of it. So yeah, I actually entered a little bit later. So sorry, it wasn't at this point yet. Let me just delete that. So price had kind of tapped into that, and then ended up pushing lower. And what I had actually looked to take a trade off of was this level here. So it's kind of looking at the fact that it continued to chain. We built some liquidity in between it, and then I had set an order somewhere around here. I'll just take a screenshot so you guys can see. So again, this is an L that I took on it, but again, for transparency, you know, I don't win every trade, and there are going to be instances where you're not going to catch, you know, certain trades. So let's just double check that's exactly the same. So those are those two bars there, and then you can see that I kind of entered around this area and covered this high, which is right here. So you can kind of see what happens. Price just kind of shoots through it. It ends up sweeping both this high and this high. And then what happens? Well, our market direction overall was correct for a little bit. I mean, we got enough of a move down, but what ended up happening was price ended up sweeping all of this and then finally retraced down. And a lot of this is because of the volatility that we saw at 2 p.m. today for FOMC. So moving on, let's look at euro dollar next. All right, so this is that euro dollar trade I was kind of mentioning, where I'd only taken like 6.5 or 6.7 R on it, which is pretty good. I mean, I'm risking 1% on these, so it's, you know, not bad at all. But I was expecting that price was going to pull back after breaking these lows that we have at the bottom here. It ended up pushing lower. I think this ended up running something like 12R or something if I had held it, but you know what, I really don't care, to be honest. I pulled some nice R out of it. Could I have held it? Yeah, but we're kind of in no man's land, right? So and we're making not all-time lows, but like 12-year lows again. So EU is trading below parity again. It's really interesting. In terms of daily structure, let's quickly mark it out here. We have this high here, which leads to this low. Okay, well, we actually end up breaking here. So it'll probably look a little something like this. So this was bullish. We then broke here. So kind of like that. We then pull back, and then finally we break below this. We don't really close below it until here, so I'm going to drag this out. I'm not going to count this as structure. I'm going to view this as one leg. And then we can see that we again close below it with good conviction here. So that's kind of my daily structure. We're tapping into a flip zone here on the daily, which is nice. It's a little messy on the daily time frame, but we'll take a look at it on the 4 hour here too. So okay, 4 hour, we can see that we have same thing, pretty bearish price action. Let's go through it and make sure we kind of understand what's going on here. Right, we get a significant pullback, we break lower. We're stuck within this range. I wouldn't really count these as high conviction breaks. So overall, I would say we're just stuck in this larger overall 4 hour range. And essentially, we've tapped into this refined, well, it looks like we swept this refined 4 hour zone, tapped into the daily zone, which is the 4 hour range, right? So we swept that. And then price kind of came back, retested itself probably on the 15-minute, started shooting down. And you can see that we're taking all of this liquidity here to target, right? And then what happens? Well, price starts sweeping up, right? And sweeping kind of these lows as well. Demand is kind of in control here on the 4 hour until when we start breaking this again. So it's kind of just ranging. And then eventually we can see on the 15-minute how price started to kind of fall over, right? So I'm just going to quickly mark out kind of what it reacted to, where it started this 15-minute chain of supply, which is right here, these buy to sell wicks, which flipped off of kind of this range here, right? So price basically overran all the buyers that were sitting here previously, right? Their stop losses were probably sitting under here, so there's liquidity there that got kind of taken out as it was kind of targeted, and then it pushed them into, well, basically they converted from buyers to sellers in a way, right? So we have sellers now kind of in control here after this large range that we were in. We start to see our demand levels start to fail on the 15-minute in the form of structure breaks, internal structure breaks. In terms of 15-minute swing structure, I think it's pretty clear what happened here. It's very similar, I think, to well, it's not the same as 4-hour, but essentially we have this large breakdown, and so I'm basically just anchoring my whole trade idea based off of this, and I'm just waiting for order flow to shift bearish for me so I can take continuations. So what I'd see next is, I mean, there were some pretty nice like mitigations that happened earlier in New York session. Nothing that I caught in the session, in the New York session, but you can kind of see the chain that had developed here, right? I'll just mark out kind of this larger range because we can see that price tapped into essentially this imbalance area. It continued to push down, right? And we're seeing like demand fail all on this side, being targeted, you know, liquidity that's being taken out to fuel the move. And then same thing with down here, right? We have these presumably weak lows that we're expecting prices eventually going to take out, right? There's a lot of stacked liquidity sitting below all this, and we can kind of expect that price is going to end up taking it. So you actually see like where I targeted. Of course, I think I could have targeted these lows here. I ended up, oh no, I think that is where I targeted. I targeted somewhere around here. I believe it was a 15-minute or a 4-hour zone, something like this. So I'm just going to mark that out so that we have that on hand for when we set targets for the actual trade that I took. And then all I did was, I was essentially looking at how, you know, obviously we're going to range in Asia more, but I was basically looking at how price continued to chain here. So basically you have like these internal levels of demand that are kind of holding, building liquidity, it's sweeping it out, and then supply is just continuing to hold, right? And then I was basically just looking to take a short off of this. Again, this is an Asia session, so I wasn't expecting it was going to sweep much. There's not a ton of volatility. So I set an order in and around this area. I'll take a quick picture of it here so you guys can see. And let's just try to line it up again and see where I took it. So it was in and around this range here that I have marked out. I think it was a lot more compressed. It's kind of like this, right? Before it had actually broken out. So we can see that price kind of pushed down here, and then it retested essentially these kind of two candles, which I've marked out, right? So the way that I did it is I covered these kind of like relative equal highs. Let me just delete this so I can get it out of the way and you can see it a little bit better. But I essentially covered these highs. It was about an 8 pip stop loss from what I remember, and let's watch how it plays out. So again, you can see we're violating demand already. I'm expecting this low is weak. Like this low didn't do anything. It respected a supply level, so you expect it's going to probably get taken out. Now, the big risk I had here was, of course, if this were not in a more high volume or volatile session like New York or London, I would expect actually these highs would get swept. But because it was Asia, I knew price was just gonna, you know, play around for a bit, right? And you can see that in London session. This is where like the move actually really started to happen. You can kind of see how price sweeps this small level of like supply here internally, and then, you know, shoots lower. And so, I mean, it's just a matter of playing the 15-minute chain. It's really that simple. That was the whole trade idea. Right? I'm just playing pro trend, pro order flow, 4-hour, 15-minute. And excuse me, again, the way that I targeted it, it wouldn't have been here. It would have been around here that I targeted. So I'm trying to remember exactly why I exited at that level. It was a little bit further down. Let's see. Oh, it might have been because I was setting partials. All I know is I ended up netting. Something like 6.5 hour. It might have been because I set partials here. I honestly don't remember. I'd have to go look at my trade journal, but you can kind of see here how I closed it out. And so it was a really good trade overall. Again, I ended up running like past that. I think it ran something like 20R in total. And this is just entering, it's 18R. This is just entering on the 15 minute. Again, like if I go on the 1 minute here, I'm sure there was an entry, but like let's look at my GU trade again. I just want to show you guys. Here's the question for you guys. Would you have entered this on the 1 minute? Go on the 1 minute here. So this is that GU trade I took just straight off of the 15 minute. So I guess you could have played, okay, this range, that would have dropped your, stop loss size a bit. And then I really would have been waiting for like this level of demand to fail over here. By then, right, price kind of pushes down. Maybe you could have taken this. I wouldn't have taken this, but it's like you're gonna chase it and potentially get swept out. Maybe you would have tried to short off of this for whatever reason. You would have got swept out. And look, you would have been right in terms of market direction. But look, I entered on the 15 minute with a stop loss that's double the size of what you probably would have taken, right? If you're trading the 1 minute, and I'm in it, and I profited off of it like quite well, in fact, right? So again, I just wanted to illustrate to you guys why you should probably go on to the 15 minute if you're inconsistent with it, because really that's kind of the stepping stone to the 1 minute. You shouldn't just hop to the 1 minute right away and expect to be consistent with it. You're going to take more losses than wins. Like, there's no doubt about it. It's very rare that people come in and they're able to trade the 1 minute, without having any consistency on the 15 minute. I mean, I don't even think that happens. So anyways, I want to thank you guys for watching this video. It's a cool little display of how to trade the 15 minute. I'm hoping it helps you guys on your journey to find consistency in the market. And honestly, I'm gonna be just trading a lot more 15 minute moving forward. I will still trade the 1 minute because it is fun to catch really high R trades and scalp on the 1 minute. But in terms of just building an account and making consistent profits on your prop firm account, I think the 15 minute is the way to go. I mean, just trade a few more pairs, right? It's a lot less stress and a lot less headache. Anyways, thanks again, guys. Be sure to hit the subscribe button and hit that little notification bell so you get notified next time we release a video. And hit that like button as well as leave a comment if you found this video helpful at all. All right, take care, guys.